Hello everyone, this is your host Vaibhav. I welcome all of you to today's session of stream for the daily stock in which we are going to review the quarterly earnings for the Netflix. Its fourth quarter earnings were announced in last trading session after the market closed, and the impact of that earnings report is being felt today with the stock running more than 10 percentage point higher at the moment, and it started the day quite on the higher side. Now it is simply consolidating and trying to hold on to these gains, but whether it will be able to hold on to these gains and add more to it in coming days, coming weeks, and coming months, that is one question we are trying to answer. And for that, our crucial report is the quarterly earnings report, which we are going to use as a guiding light as we head into the uncertain future. The quarterly earnings were better than expected, with the key number, the key metric of subscribers, total subscriber, rising more than expected. The growth in subscribership has given a positive boost to the stock's share price, which it opened with a gap up open price. And I'm not really expecting the Netflix to give up all those gains, as the forecast is also of a strong quarter, the first quarter of this new fiscal year. And as a result of that, with these higher expectations and already better than expected result, we can expect the Netflix share price to remain elevated and continue to trade with the bullish bias. So, keeping both these fundamentals and technical factors in mind, we will be trying to figure out the opportunities to trade and invest over different time horizons, or you can say all the time horizons, like short term, medium term, and longer term. Now, we first consider the quarterly earnings. The summary for the earnings report is available with us. We also have the full report, which is available on the investors relation page of the Netflix. The revenue growth has accelerated for the Netflix, with it counting it its revenue growing 12% year on year. And if we look at the operating margin, it has also improved to 21% from 18% a year back, and it is above its initial target of 20%. There is increased free cash flow of almost close to $7 billion for 2023. So all in all, these are the positive markers which are guiding us in this interpretation of the shareholders earnings report. Now, I won't be able to walk you through all the highlights of this large earnings report. Instead of that, we will be looking at its financial metrics, the income statement, and the balance sheet. And along with that, we will also take a look on the projections for the coming quarter provided by the company itself. Now, if we look at the factors which have contributed to the surge in the price of shares of Netflix, this surge is being driven by positive impact of the likely positive impact of increased revenues for the Netflix. The Netflix had taken some initiatives to curb profit sharing so that it will be able to rake in more money, even though the watch count remains the same. So, to that extent, we have seen some success for the Netflix, as its revenues have been increasing, and that is being primarily driven by higher subscriber base. The more than expected increase in the subscribership has contributed positively to the momentum the stock is experiencing of late, and also in the coming weeks we can expect it to remain on the higher side. So we will do well to keep looking for the opportunities to buy with so now if we consider the results for the fourth quarter, the revenues have grown 12% year on year, and the net profit has gone to rise to $1.5 billion from just half billion a year back, and it has also been able to improve its operating margin to 17% from just 7% a year back. Now we head to the earnings report first. Now here if we look at the operating income for the Netflix, the revenues remain on the higher side. The total revenues standing at $8.8 billion, which is the highest quarterly revenue it has reached in quite a long time now. The operating income was of 1.5 billion, which is higher both sequentially as well as in year-on-year term. In quarter-on-quarter, there is actual negative growth as there was more net income of 1.9 billion, but there was more operating income of 1.9 billion, but this quarter it is more of 1.49 billion. The net income is also high for the stock. It is now reaching almost a billion, which is quite high if we compare it to the net income a year back, which was just 55. It was just not even 1 million, not even 100 million, it was just 55 million. And from there on, it had risen to 1.67 billion a quarter back. But for this quarter, the numbers are quite good if you simply look at in year-on-year perspective, but not so great if you look at it from the quarterly perspective, because depending on how you are looking at this number, you can both derive sense as well as anxiety of having missed out on this big opportunity. In the balance sheet, we have these assets and liabilities listed on both the sides, and here the key metric of cash and cash equivalent at the beginning and at the end of the period have also been provided here. You can see that the net cash position of the company has improved quite a lot from just little over 2 billion to more than. Now, if we consider the operating income, the net income is higher annually but lower sequentially. And in addition of that, if you look at the cash positions of the company, the cash and cash equivalent stand at 7 billion US dollars from just little over $5 billion a year back. So with this, we have covered the key highlights of the quarterly earnings of the Netflix, which is seeing huge growth in the subscribership, and there are multiple factors which have contributed to renewed interest in the stock price of the Netflix. Now we head to the Tesla's way. First, we have to consider the quarterly earnings. For that, now we are going to look at the charting. Here comes the Netflix stock, and at the moment I don't really think there is much to do. If you had taken some risk just prior to the closing of the yesterday's trading session, there we would have gotten some opportunity to profit, and gain would have been substantial, as at the moment the stock price of the Netflix is running almost 10 percentage point higher, and in such scenarios it is better for all the investors and traders to go with the flow and keep looking for the opportunities to go and buy. Now, if we have to consider this elevated share price, I think we will have to adopt a wait and watch approach here, because for last couple of days the consolidation was going on, and now that consolidation has given up the new way to reach to the sky and make profit. And in the Netflix share price, given the fact that it has remained elevated, I think we will have to adopt a cautious stance and maybe wait it out for better opportunity to strike our way, because at the current juncture it will be difficult to go for a newer risk reward ratio without getting the full handle of the situation. So from the short-term perspective, things are quite bullish. There are no two questions about it. But whether it will be able to sustain the momentum, that is something the time will tell, and we will have to allow it to consolidate, and maybe afterwards we can go for a new shake-up. Now, Netflix daily stock price. The daily stock of the Netflix was simply in a consolidation phase, with its higher side being capped just little below 500 mark, and that resistance seems to have been broken by these positive boost from the higher subscribers growth in the Netflix. And I feel if we have to go for a newer trade, there is not much of an opportunity in the Netflix day charting as well, which we utilize to look for the opportunities to trade and invest on the short term horizon. So even on the short term horizon, the things are looking a bit difficult, and I don't really feel we have any newer opportunity at the current juncture, and we will do well to keep the eyes open and go for the opportunity as and when arise, but not at the current higher levels, as we have couple of weeks before we see the Netflix share price dipping and consolidating again. Now, if we have to consider the quarterly earnings, the quarterly earnings of the Netflix stock seems to be in line with the kind of charting which we have seen in recent quarters, where its share price has continued to rise gradually and slowly and steadily. But regardless of the pace of these move, the direction of the pace is quite important, and I think we will do well to keep it and allow this consolidation to play out before we can decide what to do and what not to do. Now, the weekly share price of the Netflix is also inching gradually on the higher side, but there is not much of an conviction as was the case earlier. So I think we will have to go with the flow, sit on the sidelines, calm, allow things to stabilize, and maybe as and when the approach comes, we can take advantage of. The Netflix share price is not really providing immediate trading and investing opportunity, as on all the three time horizons we are not really getting a straightforward answer. So for next couple of weeks we do have the Netflix share price which can find support closer to the recent swing low, but currently I feel we will have to allow more time for it to settle and form newer connections here. So in the Netflix stock, if we have to go with the flow and keep looking for the opportunities to buy, I think the price level closer to 350 to 400 is going to be crucial. But given the fact that we have already seen these huge jump on the higher side post the release of earnings, it will be a time before the Netflix stabilizes and we can take newer opportunities. So for weekly as well as for the daily, the price levels are much below the recently formed swing highs and swing lows. So we will have to go with the flow, sit on the sidelines and go for the newer trade and opportunity only after there is a significant correction and consolidation before we can think about buying the Netflix stock again. So from short term to medium term to longer term, only the short term is providing us true clarity with this jump. I think if it spends couple of days here, we will have the possibility of a resumption of the another rally on the higher side by the Netflix share price. So keeping that possibility in mind, we will do well to sit on the sidelines and allow the Netflix stock to play out with the positive momentum on the Netflix share price. So that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback and I'll be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous day ahead. See you next time around. Till then, goodbye.